Thank you for joining me. I'm Alex, and I would like to talk to you about diversification. Or should you diversify? And the answer to that is clearly yes, because of things that are out of anyone's control that could happen to anyone. So, if you just invest everything you have into a single company and something happens that was not foreseen by anyone, that no one could have predicted, then the stock might go down significantly and you might be out of quite a lot of money. So let's say you invest in Amazon and Jeff Bezos decides to take a trip to the moon and somehow does not return. Obviously, well, that could have been predicted, but it's something that would definitely send the Amazon stock on quite of a downturn. And if you had all your money in Amazon, you might not be okay with that. So diversification is a good thing in that you spread your risk out to at least a few different companies and preferably a few different sectors, so that should something happen that wasn't priced into the stock, that you wouldn't lose a significant amount of your money. So is it important? Yes. But again, it depends on kind of what I touched on last night, which is how risk averse are you? And how much of a risk is there in the companies you invest in? And that is the last point. How much should you diversify? And a lot of it depends on just how much research you put into the companies you invest in and how safe the companies are that you invest in. So let's say you determined that Coca-Cola is the only company you want to invest in, and you don't see them ever going broke, you don't see them ever selling less than the previous year, you don't see them ever cutting the dividend. If all of that is a given and you think that Coca-Cola is the best company that you can invest your money on, then I say go for it, and I say don't diversify. Because chances are the company is perfectly safe, and chances are you're not making too much of a mistake by not investing in another company. Also, I think that the investing horizon that you're working with plays a big part in this. If you need to pull out money in, say, 2 years because that's when you retire, or that's when you want to quit your job, or that's when you want to buy a house, then having all your money in a single stock is obviously a terrible idea, because many things can happen. As I alluded to before, there's things that can happen to a single stock that no one could have foreseen that will send them on a downturn. And for Coca-Cola, that might be that there's an earthquake that destroys one of the biggest plants, or, there's a whole number of things that could happen, but have a very low likelihood of happening, so that you don't really pay attention to that. If you invest in companies that are not as safe but provide a higher return, then I think you should be well diversified. And I think that any stock portfolio should have a few very safe stocks in the mix, so that you don't lose a lot of your money if the inevitable thing happens and one of your stocks just takes a nosedive for whatever reason there may be. Like, say, for Snap, for example. Somehow Instagram just completely kills Snap, or let's say Twitter makes a comparable product, and now everyone who already has a Twitter account obviously has a Snapchat account or an Instagram account, and things move. So that might cause Snap to really probably go bankrupt within a few years. And if you only invest in big companies like Warren Buffett, for example, Warren Buffett has way too much money to invest in smaller companies. So the companies he invests in are in the hundreds of billions of dollars of market cap. So they tend to be very safe companies. They tend to pay a dividend every year. So I don't think that you need to diversify too much when you're investing in such huge companies. But if you say you have a significant amount of your money in Uber, and now beyond Lyft, now let's say Facebook starts a ride-sharing business. Everyone already has Facebook. Everyone already has Facebook Messenger, and they just put a button in Facebook Messenger that says, "Get me a ride." Now, all out of a sudden, Facebook could enter the market, and they could grow quite quickly, and Uber stock might take a significant nosedive. Things like that could happen. You would be advised to diversify your portfolio quite a bit. And you should also diversify in different market sectors. So if you're a tech investor, you mostly look at tech stocks, you should probably invest in safer stocks in a vastly different segment. So let's say you have stake in Apple. You should probably, look at a McDonald's or a Coca-Cola, maybe even a Walmart or an Amazon, maybe even commodity utility type businesses that are in a completely different sector. Now, the problem with Apple itself is that it ties into everything, right? So Apple is sold on Walmart and Amazon. They run on AT&T and Verizon, and there's just so many different market sectors that they kind of branch into that it's not quite that easy. But getting a few different market sectors into your portfolio will be helpful in reducing your risk that, say, someone starts a trade war. And all of this, again, depends on your horizon. And if you think that even in the absolute worst case scenario, the stocks that you invest in will go back up before you need to sell the stock and pull out money out of your stock portfolio, then I think that the whole diversification thing might not be that important. But the time when it's important is if you invest in companies that are not quite safe and might go bankrupt. You don't want to put 100% of your money into a stock like Snapchat or Twitter, Uber, even Facebook, because they might get disrupted, they might go bankrupt, and you don't want to have all of your money in that. If you have a really safe stock like Coca-Cola, Walmart, probably Amazon, Google, probably Microsoft, then I don't think that diversification is such a huge deal. And sorry for the rambling. This kind of got way too long, but I hope I got my point across. Do diversify. Do diversify depending on how much risk you're willing to take, how risky your portfolio is, and what your horizon is. That's it for me for today. If you haven't already, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.